Welcome to Markets Now. I'm Michelle. Work with Brad Koima, Varlick, seeing some mixed trade in both grain and livestock futures this morning. And Brad, we'll start off talking about the cattle market. The live cattle futures had a stellar week last week. We were up $78 on the futures. Cash was stellar as well. And so let's talk a little bit about that, and if we can keep going here.
Thanks for having me on, Michelle. I appreciate it. And yeah, let's throw a quick little $11 rally here into the market last week. Huh? Obviously, if you're talking about cattle, you at least have to pay some attention to outside news, which of course starts and ends, I think, mostly with the tariff talk. Obviously, dragging what potentially that means to our economy, how the stock market's reacting, all that stuff. I think that the bears maybe overplayed their hand a little bit, using this uncertainty news, which uncertainty is a problem, of course, but using this news to get their cash cattle to break a little bit. But I think, to quote an old saying, the dog ran to the end of its chain here. When you got to the end of that news and the reality of the market, it's still on the cash side, at least, Michelle, is that there isn't a lot of cattle in the north. And there's much less than I think that the trade thinks. Because of good weather and because of good prices, we've pulled the cattle ahead. In my opinion, the yearling crop's been pulled ahead a month or so. And all of a sudden, you're looking at staring down the barrel of very, very, very small show lists here in the north. And that's going to be that way for a while. And so the cash caught. We literally went from Thursday bids at 195 to a little bit of 198 on Friday morning, and then quickly to 200. Actually, there was bids as high as 203 here Friday afternoon that were passed. That's a lot. That's a big change. And it's, if you're a merchandiser, it's hard on you because, that's a lot of money per animal. Talking $7, $8 a head in the space of 24 hours. But that's why we rallied, in my opinion. It wasn't that all of a sudden this was a kiss and make up deal that the tariffs are never going to happen, but rather it was induced by proving that the cash market, again, leads another rally like it's done for the last 16 months or so.
Right. So do you think cash will be steady to better this week? And from a futures perspective, now that we've gotten back above some of these key, at least psychological areas, even if not technical, can we continue to build on that?
I think the short answer is yes. I think cash will be higher. I think asking prices up here will be around 205, and I think there's a great chance that we'll get that. We did a lot of good things technically last week. People were probably, I don't know if you were interviewing anybody on Wednesday or Thursday, talking about potential head and shoulders formations, failing at halfway back and all that other stuff like the market had done. We ripped right through all of that stuff. And now really the chart to me looks more like, well, let's measure another leg up and see where that carries us to. That's the camp I'm in, that there's another leg up coming. I don't think we've seen the high on either cash or futures for this cycle of this market. But stay tuned. One shift in the news, of course, and you have to be careful. So I find myself suggesting buying puts more than I ever have probably in my career, but using that as a mechanism to try to stay a little bit friendly to the market as well.
And what about the feeder market? Do we need to talk about that separately, perhaps?
That's a great question, and probably a pretty good piece of analysis on your part. The feeder cattle, for a while, if your listeners are familiar with what's called the cattle crush, basically you're talking about, what should feeder cattle be worth if fats are worth this and the cost of feed is worth whatever it is. Okay, it's a calculation between corn, live cattle, and feeder cattle. So for a extended period of time here, and still frankly that way, feeder cattle are unusually high, or live cattle are unusually low. To balance that equation, one of those two things usually end up happening. The cash feeder market has started to, the index that we follow anyway, has started to sell off. It maybe isn't so much because of what cattle are worth at Fort Pierre or at Napoleon, North Dakota, but it's more what they're worth at Oklahoma City. Okay, so what we're seeing seasonal decline of the number of cattle available in the north that go in the index. much more higher percentage of cattle out of the south, and they don't bring as much. So you've seen that index. Now we're taking the index where the futures are like $4 above the feeder index, and that's a drag, I think, on the market a little bit. And just a little bit of firmness over there in the corn maybe contributing to that too. But the feeder cattle, I don't want to say out loud to any cow-calf guy but they look a little high here, and they could probably stand to correct a little bit versus the live cattle.
Yeah, and they're kind of, I guess, lagging a little bit this morning. Now, the hogs are still staying a little bit firm here, despite the fact that we've had the China tariffs go into effect here today, the 10% on beef, pork, as well as soybeans. But it looks like the hog market is absorbing that pretty well.
Not exactly. You're right. Hogs have not gotten any easier for me to trade. But just looking at I have a tendency to find myself looking more at chart stuff when there's so much uncertain fundamental news out there.
Yeah.
We're trading at a pretty big discount to cash. Typically we would start to see some seasonal firmness here. There's an old saying that you sell the first snowstorm and buy the last one. So if we have a snowstorm, I guess that's the last one. That's what you're supposed to seasonally do on the hogs. How's that for a dumb statement? But I struggle a little bit with the chart because there is a ton of resistance. We're at halfway back on the April hogs. I've got 4 different moving averages that all cross within about 75 cents of each other, just above where we are now. I think there's some real proving ground here, in that 86, 60, 70, 80 slot to 88, 60, 70, 80, like 100 points higher than we are, to see that's what we're worth. But the tariff thing is real, and it's hard to view that in any way as being friendly. And it looks like we're getting along better with Mexico, but clearly they're our critical trade partner with that pork thing too. So stay tuned.
Right, but as of Friday or Thursday at least, pork is under the USMCA and it is a compliant product. So as long as we keep that in mind, Mexico we shouldn't be seeing any retaliatory tariffs, I wouldn't think, on pork.
Agreed. At least at this point, that seems to be the way we're reading it for sure. You bet.
Yeah, and I've been watching that 50% retracement too. So hopefully we'll see if we can get through that area. Okay. What do we do with the grain market? Obviously, after the tariff situation was delayed, we did see a rebound in the market, especially in the corn market. But where do we go from here, I guess, is the next question.
Well, I'm afraid, like I've said multiple times here on your program, I feel differently about the 2 things that we're probably going to talk about here, because we're going to talk about corn and beans. I have a higher level of confidence that the corn maybe can firm up a little bit more from here, particularly the old crop corn. That certainly is what the spreads indicate. I'd like to see a little firmness in the basis, but we're not really getting that very much yet. But from a carry out or supply situation, I could still make an argument that the corn's probably got a little bit of room, more to the upside. I was never quite convinced why the beans had really a great reason to rally here. I mean, have we completely forgotten that we got to deal with the record Brazil crop here coming up the next little while, starting already in some places? I think that the tariff talk there too is very real and potentially a factor. If you look at what's going on with some of the competing stuff like canola, we don't usually talk about that, do we? But in soybean meal, and that's, I think, in reference to what's happening with China and Canada now getting along. The tariff situations going there. So I think the beans are a little bit vulnerable. Next thing, though, we'll talk about is acreage battle, right? And unless something really changes, it certainly looks like that favors the corn. Big plantings of corn. I think that last estimate by that whatever that conference deal that they had, 94, I think that's conservative. I think we'll be a lot bigger than that by the time it's all done.
Yeah, no doubt. When I was at Commodity Classic last week, everybody was higher than the USDA outlook for them, above the 94 million acres. Just one follow-up on the soybeans. There's a lot of layers to peel back there, as you just mentioned, because of the South America crop situation, what you said about China and the canola, or the Canada and the canola situation. But we are past the point where the tariff should really matter, right? Because China's not really going to buy any more soybeans from us yet this year. So
You're 100% right. This ends up being a talking point. Sometimes futures have a little problem with, I'm still convinced that there's headline algorithms, I call them, the algorithms that react to news stories, whether they're really pertinent or important at this point. No, we're going to enter a period of time here where we never sell them beans. Like, who's kidding who? I mean, they find a place where it's the cheapest to do to get their business done. So you're right. It shouldn't be, and nor do I expect it to be a big deal. The problem is just where are you going to come up with a big round of bullish news to get the market here to go anywhere too.
Yeah, no doubt. All right. Thanks so much, Brad Koima with Koima Varlick. That is Markets Now.